All right, let's talk about money. We think about it, we stress about it, we make plans for it. But if you ever really stop to think about how we think about it, it turns out that our biggest financial moves often have very little to do with math and everything to do with the strange, fascinating, and, let's be honest, sometimes totally irrational software that's running inside our own heads. I mean, this is the big question, isn't it? It can keep you up at night. You know you're supposed to save more, invest regularly, say no to that impulse purchase. And yet, it's such a struggle. That gap between what we know we should do and what we actually do can feel massive. And it's not because you're bad at spreadsheets, I promise. And this quote just gets right to the heart of it. The real fight for your financial future, it isn't happening in your bank account. It's happening right between your ears. Your emotions, your biases, your habits, those are the things that are really calling the shots. So, if we want to understand this messy human side of money, where do we even begin? Well, it turns out there's an entire field that brilliantly connects the dots between a calculator and the human brain. And that field is behavioral economics. You see, old school economics kind of assumes we're all perfectly rational robots, always making the best possible choice. Behavioral economics takes one look at us and says, yeah, no, we're human. It mixes psychology with economics to figure out why we do the weird things we do with our money. And this isn't some new fad either. The core idea actually goes all the way back to Adam Smith in the 1700s, but it really exploded in 1979 with Kahneman and Tversky's prospect theory. Then you had guys like Richard Thaler pushing it forward, and he eventually won a Nobel Prize for this very work. So this stuff is built on decades of really solid research. Okay, so let's dig into the specifics. What are these mental quirks that get us into so much trouble? The best way to think about them is like little bugs in our brain's operating system. You know, our brains are built for speed and efficiency. To get through the day, they create all these little mental shortcuts. The fancy term is heuristics, and they're great. They stop us from being totally overwhelmed. But when it comes to money, these same shortcuts can turn into some pretty major financial glitches. First up is a big one, loss aversion. In simple terms, the pain of losing $100 hurts way, way more than the joy of finding $100 feels good. Our brains are just fundamentally wired to avoid losing stuff, even when it doesn't make logical sense. And this imbalance is seriously powerful. Researchers figure the sting of a loss is about twice as strong as the pleasure of an equal gain. This is exactly why we hold on to a losing stock for way too long, just hoping it'll bounce back, or why we're too terrified to take a smart investment risk in the first place. And then there's confirmation bias. Oh boy, we all do this. You decide you like a certain investment, and suddenly you only seem to find news articles and opinions that tell you you're a genius. All the warning signs and negative reports, you just scroll right past them. It's like putting on a pair of financial blinders. And let's not forget the framing effect. A yogurt that's advertised as 95% fat-free sounds way healthier than one that says 5% fat, doesn't it? It's the exact same yogurt. How a financial choice is framed, how it's presented to us, can totally flip our decision, even if the numbers are identical. Okay, so these little mental glitches might seem pretty small on their own, but what happens when you multiply them by millions of people all at once? Well, you can get massive, world-shaking events. Let's just take the Chinese stock market bubble from around 2005 to 2008 as a case study. This thing wasn't just driven by spreadsheets and company earnings. No, it was supercharged by pure, raw human emotion. You had greed, the hunger for fast cash. You had envy, watching your neighbors get rich and feeling like you were missing out. And you had pure speculation, just buying something because you hoped the price would go up. And the result was just staggering. The market rocketed up over 500% in only 2 years, a total textbook bubble. And then, just as fast, it all came crashing down, wiping out 70% of its value from the peak. It was an absolute roller coaster, and psychology was in the driver's seat. So here's the key takeaway from that. What starts as one person's little bias can get amplified by the crowd until it becomes a full-blown mania. When everyone gets greedy at the same time, or everyone gets scared at the same time, logic just goes right out the window. And that's when you see these insane market swings. All of this kind of begs a really important question. If chasing the highest returns and comparing ourselves to everyone else is so dangerous, then what are we supposed to be aiming for? What is the actual point of having money anyway? There was this incredible study where a researcher interviewed over 1,000 people who had lived past the age of 100. He asked them for their biggest life lessons. And you know how many of them said they wished they'd earned more money in their life? This many. Zero. Not a single person. That is some serious perspective right there. So what did those 100-year-olds wish for? More time with friends and family. And as the author Morgan Housel puts it so well, that's what money can actually buy you. Not more stuff, freedom. The independence to control your own time and to build the life you actually want. So how do we put this into practice? What's the new mindset? Well, first, just accept it. Your emotions are in the driver's seat. Second, start to see money not as the end goal, but as a tool to get more control over your time. And third, this one is the toughest, you have to define what enough means for you without looking over your shoulder at what everyone else has. Because when you boil it all down, this is the real peak of wealth. It's not a number in a bank account. It's having control over your calendar. It's the simple, incredible ability to spend your time how you want, with who you want, for as long as you want. That right there is true financial freedom. So, I'll leave you with this to think about. Take a hard look at your own financial life. Are you using your money as a tool to build a life that's truly yours? Or have you accidentally fallen into the trap of using it as a yardstick, constantly measuring yourself against an endless and ultimately a really unsatisfying social scoreboard? The answer to that question, well, it just might change everything.